Kaspar, is it now a good time to buy Netflix stock?
Why now?
Because they presented their figures.
Yes, a couple of days ago.
Exactly.
We have some ideas about it, so keep on watching and we will explain everything about Netflix. Netflix is trading now it is now Friday morning for us. It closed at 226 yesterday.
Quite a recovery.
No.
Well, I think so.
No, we spoke about Netflix also after the Q2 figures, and it was exactly 3 months ago, 22nd of April, and then it closed at 223.
Yeah.
So it didn't move at all.
So you didn't look at Netflix since then?
No. So that we're going to discuss. What happened in the meanwhile? What was in the figures? And there is some interesting thing in the figures that I didn't see people talk about, but it's interesting for you if you are interested in but you're looking at this video, so you are interested in the share of Netflix.
Absolutely.
It's related to the earnings per share. It's quite interesting. First, it came later than the figures, but now we're going to talk about it first. The ECB.
Yes.
The inflation fighters.
Everybody was really anxious about what was going to happen this week with Christine Lagarde. Is she going to do the 0.25 or is she going to surprise us with a bazooka of 0.50%? I think everybody sort of, like, if you have some common sense, would have understood that it would have been 0.50, and effectively it was 0.50. And they had some sort of radio silence ahead of the speech, and then they came out with this amazing new financial instrument, the ITP. And what is it? Sorry, no, it's not the ITP. I say it wrong. It's the TPI, the Transmission Protection Instrument.
I think that the whole meeting was about that word.
Yes.
Those
I think
three
they had
words.
some sessions, and maybe some external consultants, very expensive external consultants, to think about the word, the Transmission Protection Instrument. So basically, that is that, and that instrument comes next to the app, the APP.
Do they have an app?
Yeah, they have an app.
Oh.
The Asset Purchase Program,
I know.
and of course the PEP, which is the Pandemic Emergency Purchase Program. So they have really innovative financial instruments to fight all the struggles in the financial system.
And the last one is the TPI.
The TPI.
Can I buy a TPI?
I think for you they might have some access to the TPI.
What is a TPI? What do they do?
Well, they just buy assets.
Okay, the same way.
Yeah. So it's not really something special, I think, what they've done.
Oh. No, I think, we are laughing about it a little bit because they say we are fighting inflation. We have the goal of 2%.
Yeah, 2% goal.
The inflation is 9 or 10%. So I think you are not, you're not succeeding in that. No, but there are external things, war and energy prices. Yeah, okay, but then you should say, okay, we have a goal too, but not in this and this and this and this and this in this case because
because of all those things. No,
how did the market react on it?
Well, the most important thing I think we were all looking at was the weak euro, and the euro became really, really weak over the last 2 months, I think, specifically, and lost almost 10% of its value, and. I was hoping to see some positive, some strengthening euro actually, but it didn't happen. Initially, it looked like it. We went from 1.0180 to 1.02, so almost 1 cent came on top of the price. But the market, you said it actually quite funny. It was really neurotic, because then in less than 20 minutes. The euro went back down to the level where it was started before the meeting. So I think, and I also see that in the consensus that the market is not sure how to take all this. And it's really stupid, of course, to say that, but I think there's a truth in there. You see that the market is really, okay, we go up again, we go down.
Was the Eurozone the last one that increased the interest rates?
Well, they were definitely not one of the first ones. No. So that was about the ECB, and I think that will keep us busy also towards September again. And next week, of course, we have the Fed. They were going to announce what they're going to do. So we go from interest rate hike to interest rate hike, and it will keep the market busy as always. Now, more interesting stuff. We're going to talk about Netflix. Have you watched Netflix last night, Kaspar?
Why?
I don't know. But you can't say there was something nice on, but there's always something nice on.
No, I didn't watch it, Martin. No.
I'm watching a new series. I really enjoy it. It's really relaxing. It's Big Lumber. It's about a couple of American guys. They have a wood factory, and then they go
Lumberjacks.
Yeah, they just get free wood. They get with a boat on the river and they're gonna
steal it.
No, they clean up the mess and they sell it.
But what is it?
It's like a documentary.
A documentary.
Yeah, and it's for me. I like it to watch these guys do business.
Last quarter,
Yes.
the announcement over the first quarter, that was surprisingly bad, and then the share dropped. We have it here in the chart. It dropped enormously, based on the new subscribers, because the market thought a couple of new subscribers, 2.5 million, I think, and they lost subscribers.
Yeah, that was not a good thing.
No, mainly due to the war in the Ukraine, that they lost subscribers, mainly in Russia.
Yeah.
And they also announced, and that's why the share dropped more. They announced to expect in the second quarter to lose another 2 million.
Yeah, that was what we were really worried about.
Yeah,
but it didn't happen.
No, but first a little bit about Netflix itself. Last time we spoke also about Netflix, but now we do it a little. We try to give you another angle. It's more like the content-wise. That's why you maybe started already. Did you watch Netflix? I do watch Netflix normally, but not yesterday. But the marketings that they have a problem. They have some more problems, and we're going to discuss it also. We discussed them also last time, but they have a content problem.
Yeah.
Do you feel the same?
No.
No?
No, I don't think so.
Oh, okay.
But that's a very personal opinion.
Yeah. Now the marketings, first of all, that they don't choose a certain sector. If you, for example,
that is true.
If you look at some Peacock, they are more in the comedy sector, and HBO is more in the drama, and of course Walt Disney.
You know from who it is? It's from Warner Bros.
Warner Bros. And Walt Disney also, of course, clear has their sector. So people,
films.
you know, like if you take a subscription to Walt Disney, you know upfront what to expect. No? If you don't like Donald Duck.
Yeah, but I like. You know what I like from Netflix? The surprise factor.
Oh,
I mean it.
Yeah.
Hey, this I like to see.
Okay.
Oh no, I didn't know that. These are nice.
So
like now, for instance. Sorry, I keep interrupting you.
No.
Like they have made this documentary about the Boeing 737 Max. Those things is like, you know, you get insights into something that kept us all really busy, and they present it in a certain way that it's quite good to see, like the attacks in the Barcelona Rambla. Of course, those are not funny things, but it gives you really good insight in what's going on.
You have a functionality in Netflix that I think it's called don't know what to watch. You always push that button?
Yes, and then I watch what comes
really?
up.
Yeah, then you have a big surprise factor in Netflix.
Yeah.
But the marketings, they one of the problems is that they don't choose a certain sector. And also, their top 3 most popular series series was Stranger Things, Squid Games. That of course was not a series, but it was a.
It was a series.
Was it a series? Oh yeah, it was a series. And Bridgerton, I don't know. If I pronounce it
weird, it's weird programs.
And the problem is that with that is that was really well watched, but they don't have a new thing in the same sector around it. So what you see, for example,
they make new episodes maybe.
Yeah, but also not only episodes because season is finished.
They don't pamper the same viewer.
Yeah, so they don't have something new for the viewer.
No.
And that's why you saw, for example, in the US, 23% in April of new subscribers, they already gave up the subscription. So I think that was maybe they because of Stranger Things, they all subscribed for 1 month. I think it was even a good price, and then 23% canceled the subscription. That's a lot, so because you pay a lot for the new subscribers, and then they are gone again.
Yeah.
So if you look at Disney, for example, they have a really clear schedule, but also HBO.
Yeah, that's true.
So they know within the same program what to offer, but also an alternative, and they push it better. So content-wise, Netflix doesn't choose a certain sector well enough, and they don't have a schedule. So that's from a content-wise, from the market, what they're not doing well enough. And hopefully, if they can improve that, then the churn, so the people that stop, will be much better. Okay, let's go to the figures.
Yeah.
Better than expected. And if you didn't know the expectations up front, and they they lost almost 1 million subscribers, and the market reacted really positive. Then you don't know. If you don't know a little bit more, one layer lower of your company, you think they lost subscribers, and the share price went up because of they thought that they would lose till 2.5 million subscribers. It's better than expected. So earnings per share was $3.20. Remember that one, versus 2.93 expected.
It's not bad.
Revenues 8 billion versus 8 billion expected, and the subscribers were 1 million better than expected. And the growth, so in the internal figures, if you go lower, you have growth, and they lost in the US, but they grew in Asia market 23%, and Latin America they grew 19%.
That's positive.
Yeah, they're quite
Big markets.
Good markets. And they probably will announce a partnership with Microsoft. So what they have to do, the content-wise,
For advertisements.
yeah, for advertisement, they're going to work together with Microsoft. And Microsoft made also a deal with Samsung for pushing their programs and their games also. Because Microsoft is the owner of Xbox, if I'm right.
Yes, correct.
Through the Samsung television. And Netflix is going to work together with Microsoft in that program. So that's really good. And they announced that they will introduce the advertise new methods in the early 23. And then they still have to do something about the non-paid. They say they have around 220 million subscribers and 100 million that are not paying anything for it. So, but I didn't see a lot about it. So
no, it's also a difficult thing.
I was surprised that they didn't come up with a really straight program. Okay, the ones that now looking for free, they only have to pay blah 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 $3.
Yeah, something at least to make it more profitable.
Yeah, I didn't understand that.
No, I understand that you don't understand it.
What? Before I end up with the interesting thing about the earnings per share. So the share was trading at yesterday, stopped trading at 226, 223 3 months ago.
Yeah.
What did happen in between?
Well, it dropped to almost 165, I think.
Yeah.
Yeah. So people that were expecting like a quick recovery or like a reversal, it didn't happen until now. So yeah, that was many people that took a longer option positions. They were struggling out of those things, but yeah.
And based on
that's it went down and it went back up again.
Do
so
you know what the price was 1 week ago around?
Don't pin me down, 180 or something.
Yeah, something like that. So so it grew like 27% in the last week, based on the figures. Yeah, so the market is positive.
Yeah, I was very positive about it.
But if you go back, the same price as 3 months ago, then they expected a loss of 2.5 million. It was only 1, and you are still at the same level.
Yeah. No, absolutely. It's insane.
They gave also some outlooks for the Q3. 12% expected more revenues and at 3% less profit. That's what they expect now. The earnings per share for this year are expected $10.21. So the
expectation, yes.
Yeah. So the price earnings is about 20 something.
20 something. Yeah.
10.21. The first quarter they had already an earnings per share of 3.53. The second one I just mentioned at 3.20. If they expect a 3% drop in profit for next quarter, that will be then around 3.10. So then they will, after 3 quarters, already generating $9.18 per share. And it's still in the figures, the expectations of the analyst, 10.21. So if they have a really bad last quarter, but you mentioned also, I think normally they have more subscribers in when it's getting autumn, no?
Getting bad weather, yeah. The weather's getting dark. No, the weather's not getting dark. It's getting more.
So maybe if they have even a bad fourth quarter of $2, then it's still 11.81. So I think that the market still thinks that the earnings per share is too low compared to the actual figures and the outlook.
I totally agree with you.
And then
because you would say that if they double, they get out to 13.
Yeah. And then it's a cheap share because then it's trading at what is it for 15 times or whatever.
Profit,
yeah. So based on the last quarter, exactly 3 months ago when we made this vlog, then the price is the same, but the expectations were less than expected. And if you look all the figures, or some figures combined, then I think it's really interesting.
Yeah, and also if you look at just the fact where it stands from 1 year ago, it's 62% down.
Now that's year to date.
Year to date?
Yeah.
Oh, I thought it said trading year.
Trading year to date. Yeah, it's still, I don't know, but I think it's still the worst performing stock of the S&P 500.
Yeah.
And what comes down?
Goes down further or goes back up.
Do your homework.
Yes.
Look if you like it. If you look at, for example, the competitors, they all gained market share in last year. They lost market share. The thing is, can they stop that declining and turn it back? If they can, then it's going to be an amazing share. If they can't, then it's not maybe the good buy.
We'll see.
Well, we hope that we give you some extra interesting information in the worst performing share until now in the S&P 500. Good luck. Give us a thumb.
See you next week.